This is James Hirechek with this week's Autochartist weekly recap of the Forex futures and equity markets. Started out the week looking at the EURUSD, or the Euro Australian dollar. Because of the strength in the Euro and the weakness in the Australian economy, we were looking for a rally. We did get this surge to the upside early in the week right in here, but that drove it into a resistance point, helping to form the resistance angle of this triangle chart pattern. The subsequent break helped to establish support. Now we're in a triangle formation, which indicates impending volatility. We're also in an uptrend, so we are looking for a potential upside breakout in a continuation of the move. Fundamentally, it's all up to Europe. If Europe continues to strengthen because of expectations that Spain is going to ask for a bailout, then we're likely to see the EUR rally against the Australian dollar. That is because the Australian central bank is considering a rate cut. So continue to look on the upside in the EUR, AUD, Euro dollar, Australian dollar. Second market we were looking at later in the week was the New Zealand dollar against the US dollar. Again, perceived weakness in the dollar and expectations of greater demand for higher risk assets helped drive the New Zealand dollar up against the US dollar. Okay, we did have a rally early in the week right here, this big surge, and that's about the time we recommended it. It was a breakout above key level resistance at this point. Now that the market is stabilized because the dollar is strengthened, if traders are starting to bail out of these higher risk assets, we're starting to look at some weakness in the New Zealand dollar against the US dollar. Late in the week, we saw a breakdown near a target zone at 81.16, but then a quick recovery. Because of this choppy action on both sides of this pivot price or key level price at 81.64, it may be the market you want to stand aside on until there's a clearly distinguishable chart pattern. Late in the week, we started to look at the movement in the British pound US dollar, or GBPUSD. We started to see weakness develop, and we had an emerging pattern right after this large candlestick was formed. This was showing us that there was momentum to the downside. As the move materialized on this 240-minute chart, later in the week we did see a penetration of this support line, and this completed the chart patterns. We're now looking for this momentum to continue to possibly drive this market into 158.16. That's in the British pound US dollar, GBPUSD. And finally, we ended the week looking at the US dollar Japanese yen relationship on the 60-minute chart. What we saw here is a flat chart pattern. This is a triangle chart pattern, but it's a non-trending pattern, and because of that, we're getting this sideways trade. Again, if there's going to be demand for safety, then you're going to see the Japanese yen gain on the US dollar. If you're going to see some demand for higher price quality assets, then you're going to see traders sell the yen and buy the higher yielding assets such as the dollar or the euro against the yen. So right now, because they're unsure as to whether the Japanese government is going to come in and try to weaken the currency, we have this holding pattern going on in the USDJPY. But the longer they stay in this holding pattern or tight range, then the greater the chance of a breakout. So traders should look for volatility to hit the USDJPY or US dollar Japanese yen market, and that should be a market to watch next week. This has been James Hirechek from Autochartist with this week's weekly Forex futures and equity market update for the week ending October 19th.